In this video, we will talk about the latest development about Tesla, its price action, the fundamental news and the best course of action for the stock. Before we begin today's video, if you like my content, please consider to like, comment and subscribe to my channel. It's important to emphasize that the following discussion is solely for informational purposes and does not constitute financial advice. As we move forward, we'll consider recent market trends and the factors influencing TSLA's movement. As of the close of the last trading session, TSLA exhibited a decline of nearly 3%, settling around $221 per share. This performance stands in contrast to the broader market, where the Nasdaq index declined just over 1%. Such variations in stock performance can often be attributed to a range of market dynamics. Turning to the candlestick chart, we observe a crucial pattern that has shaped recent movements. It emphasizes the importance of support levels and their potential to transform into resistance levels. This scenario played out when Tesla's stock broke below a key support level, followed by a retest of the same level as resistance. Amid ongoing uncertainty, some analysts have raised concerns regarding further downward movement for Tesla. These predictions suggest that the stock could potentially test price levels ranging from the mid-$220s to even lower levels like the $210s. However, it's essential to note that pinpointing exact price targets is challenging due to the inherent volatility of the market. The Moving Average Convergence-Divergence Indicator, a popular tool for tracking trends, has recently shown signs of potential bearish crossover on the weekly chart. This development is indicative of the ongoing market sentiment and suggests the need for caution. Furthermore, the monthly chart, although not yet bearish, calls for a bounce in the coming months to maintain bullish momentum. Analysts have been closely monitoring options flow, seeking insights into market sentiment. The analysis of options data indicates a noteworthy presence of bearish bets, reflecting the skepticism of certain market participants regarding TSLA's immediate prospects. These options bets underscore the need for careful consideration of market sentiment. In the dynamic world of finance and investment, startup and tech stocks have long beckoned to those enticed by the allure of high risk and high rewards. Companies like Tesla, with their groundbreaking technologies and visionary leadership, have captured the imagination of investors on a global scale. However, a convergence of factors is currently casting an air of uncertainty over the once promising trajectory of startup stocks. These factors include the rise in interest rates, the looming specter of a recession, the tightening access to capital, and the ever-persistent shadows of geopolitical uncertainties. The phenomenon of rising interest rates, a market-wide development, yields a mixed impact on the landscape of startup stocks, Tesla included. The effect is multifaceted. On one hand, elevated rates may put a brake on consumer spending and engender a slowdown in economic growth. This, in turn, could dampen demand for luxury goods, potentially putting a dent in Tesla's prospects. Moreover, the ascent of interest rates can translate into escalated borrowing costs for businesses, particularly those reliant on debt financing to fuel their expansion. For startups in search of capital, this could mean a tougher road ahead. Yet, the story doesn't end there. Higher interest rates can also create an environment conducive to the allure of safer assets, such as bonds. This shift in investment sentiment might prompt a migration from riskier equities. As a consequence, the bright narrative of startups, including Tesla, might temporarily dim as investors seek refuge in more stable alternatives amidst the ascendancy of interest rates. The shadow of a looming recession is another factor that paints a clouded backdrop for startup stocks, and Tesla is no exception. Startups often navigate through an intricate dance of uncertainty, leaning heavily on the optimism of investors willing to embrace risk. A recession, however, can deliver a blow to consumer spending, which in turn can trigger a decline in the demand for innovative products. Investment in untested ventures could also experience a downturn, impacting Tesla's ability to sustain its growth momentum. Venturing into the realm of startup stocks is synonymous with embarking on a quest for capital. These ventures necessitate substantial financial infusion to propel research, development, and market expansion. The constricting access to capital, spurred by tightened credit conditions or wary investor sentiment, can hinder the progress of startups like Tesla. A scarcity of funding has the potential to curtail innovation, postpone product launches, and constrain growth prospects for companies that thrive on consistent investment. In this intricate tapestry, geopolitical uncertainties emerge as a formidable challenge. The ebb and flow of global politics, trade tensions, and regulatory changes can reverberate across financial markets, sending ripples that affect high-risk assets such as startup stocks. For Tesla, a company with a global footprint, shifts in international relations can sway demand for its products and introduce disruptions in its intricate supply chain. Tariffs and trade impediments can elevate costs and create a ripple effect throughout the production process, influencing profitability and investor sentiment alike. Amidst these intricate threads, startups like Tesla demonstrate resilience and adaptability in the face of adversity. In response to the challenges, these companies are likely to explore multifaceted strategies. Diversification of product offerings and expansion into new markets can mitigate dependence on a solitary revenue stream. Focusing on cost optimization to enhance operational efficiency becomes imperative. And above all, the engine of innovation must continue to churn despite the financial headwinds, to remain competitive and attract the ongoing interest of investors. In conclusion, the recent performance of Tesla stock has raised questions about its potential bottom. While there's uncertainty in the short term, the market remains focused on a potential rebound. So far, Tesla has been able to demonstrate to the market that it has a robust brand image and a plan to scale up its production, while also inserting itself into the global market as a key player in the electric vehicle market. It should be determined next whether Tesla has enough steam to push higher in the short term, or if we have to be more patient and give the stock more time to recover its value. For now, I believe that we should be more cautious about buying more Tesla shares.